Good morning. Good morning, traders. Give me just one moment. I am getting my goodies over here set, and then we'll get rocking and a rolling, see what we got going on today. Let me make sure I got some sound. There we go. All right. We out here. We out here today. All right. Happy hump day. Got a little bit of a late wake up start today. So pounding my caffeine as we speak. And so I can start turning some cartwheels here in a minute. Let me get my charts up and running here. Get my screen shared. And there is, let's do this. Window. There we go. Now we're up and running. Let me make sure everything changes on me. Okay, perfect. We are good to go. All right, economic calendar, ladies and gents. What have we got going today? Retail sales and PPI numbers. That's going to be the big headliner for the day coming up here in 1 hour from now, 59 minutes to be exact. But it's for the U.S. dollar. We got some core numbers as well for the PPI. So as far as retail sales, looks like we're forecasted on the core side to keep it the same, 0.4%. Retail sales for the regular looks like 0.5% higher. So it'd be nice to see a number like that come out. The growth factors as a whole have been relatively okay, especially when you're talking about relative to the jobs. Jobs haven't been the greatest overall. Let's go take a quick peek over here at the U.S. dollar, specifically the U.S. dollar for the heat map, and just take kind of a refresher, a walk down memory lane, if you will, for the last 7 trading days, which is going to be these dates that you see over here in orange. Just last week, we had a little bit of a mixed data on the jobs front. Wage growth, unemployment rate, jobless claims, those numbers all did come in ahead of forecast. But then you flip to the JOLTS, the ADP, and the non-farm, okay? And they looked rather miserable. So looked like half of them were good, half of them were bad in the employment sector. But jobs as a whole just haven't been doing the greatest, okay, on the U.S. dollar. It's been halfway stable when you're talking services sector, PMI, the GDP, the growth number. Those numbers have been pretty good. You had a few sprinkled neutral ratings out there where they did nail expectations for the inflation numbers, okay, the CPI, the PPI at the 2.7 mark that they're at currently. So, hey, the economists got something right. Just 2 of them, that is. Just always remember, guys, these are against forecast. These are numbers compared to what the economists predicted. They do all their fancy math, come up with all these mathematical formulas and problems and try to solve everything. So just always know that anytime you're looking at one of these currency heat maps, okay, there's the euro, there's the UK, for example. Anytime you see a color other than gray, that just very simply means that the economists got it wrong, okay? Japanese yen over here, okay? You see blues, you see reds. You don't see near as many neutral reports in there, do you? No, that's just very simply because they missed the mark. So this is why I always jokingly say the economists' predictions on their forecasts on all these economic reports. I mean, it's just like watching the weather, okay? Just like getting your weather for your local area. They say one thing, but how often is the weather right? How often is the weather wrong? Okay, maybe they'll tell you it's a sunny day. It's actually, you come in the next day and it's storming out, right? Or vice versa. You plan an event. Okay, you read the forecast. It's supposed to snow. It's supposed to rain, and then you come in the next day. Sometimes it doesn't do any. Okay? You canceled that event for no reason. So that's the economist predictions on all these reports. So again, anytime you see a red or a blue color on any of these reports, that's basically what it means. They got it wrong, but they still get their paycheck every single week, right? So what a job. What a job to be wrong this often and still get paid for it. How many jobs can you actually say that would be the same case for? So anyway, yeah, as you guys pop in, just tell me hello. Let me know you're here. Let me know if there's any specific tickers you'd like to look at. Automatically waking up on a little bit of a sour note because there were a couple items I wanted to get into yesterday that I didn't. And sure enough, I didn't get into those trades. Okay, talking about silver, talking about New Zealand dollar, or New Zealand yen rather, and they flew off, ran off without me. So damn it, we'll find a new opportunity. Hello, Shinner AKV. Good morning to you. Good morning. Good morning. And as always, guys, I'm coming to you from Kansas City, so it's about 6:36 a.m. my time. So hello to you wherever you're at in the world. Let me know where you're at if you will. Are you in the States? Are you over in England? Or where are you guys at? I always like to know who I'm talking with and geographically where everybody's at. So yeah, just let me know. Macedonia. Okay. Very nice, Center. Welcome. Yeah, as always, if you guys have any tickers or anything you'd like me to check out, I usually have a watch list that I like to look at first thing. This is from the Edge Finder from Trader Nick on YouTube. So if any of you guys happen to come from there, his show, let me know. I was on his show yesterday. I did a guest appearance. We're friends, because I've always been using his Edge Finder. Well, not always, I should say, for the last year. And, throughout the course of using it, there's been a few little things that I've thought would be cool to tweak here and there. He's really good about taking recommendations and updating some things. So he's been pretty good with that. Waiting on Euro Swiss to create some zone to go bullish, but nothing till now. Also using Edge Finder. Okay, Shinner. Very nice. Very nice. How long have you been using Edge Finder? So yeah, just let me know that. But let's take a look at that here in just a second, Shinner. We'll look at Euro Swiss. 6 months. Okay. Yeah, I've been using it now for a year. Actually, I guess you could technically say 11 months. And ever since I've been using this, my trades have just been completely, they have. I mentioned it yesterday on his show. They've just completely turned around for the better. It's always good to get a complete picture, no matter what it is you're doing in life. You always want to have all the facts, all the knowledge for getting as good at your craft as you possibly can, regardless of what it is. So for me, for the longest time, it was all about technical analysis. Okay. I was just mainly looking at the charts, which is how we all typically get started. But then, yeah, and I knew that fundamental reports and sentiment gauges, I knew that they were important. That first 9 years I traded, okay, I knew it, but I just didn't understand how to use it or apply it. So anyway, yeah, for the last 3-4 years, I've been solidly, looking at fundamentals. But then as I got this a year ago, that's when everything just fell into place. So anyway, top setups. Yeah, you know what? Speaking of Euro Swiss, it's still at the very top of the list. We've actually went into the very bearish territory, which is great. Very bullish very bullish, which is a score of 9 or higher. So it's looking really good on all of its odds enhancers, except for the PPI. You got some neutral reporting out there, the jobs numbers, about half and half, it looks like. Trend. Yeah, let's just go take a look at that one first thing, actually. Euro Swiss. Let's go over here. And I try to keep an eye on my screen over here. I try to peek over here every now and then just to make sure that my screen is still sharing, because YouTube Studio has a habit of dropping the share, okay, the screen share every now and then. So I try to stay on top of it. So if you guys see me glancing over here to the right a lot, it's just simply to make sure that I'm still visible and my chart is too. Okay, so And then you also said agree. Previously, I was using only the commitment of traders as fundamentals, but this macro analysis is game changer. Yeah. Yeah. Commitment of traders, man. That's one of my favorite reports. Absolutely one of my favorite reports. And I knew about that too prior to using the Edge Finder. But again, I just didn't understand I just didn't know how to apply it. That's really what it was. I got into sentiment analysis. I started looking at that here, a handful of years ago. And that's when I ran across the retail sentiment. And kind of like what I said on stream with Nick yesterday, that's where I thought the end all be all was. And from the retail sentiment, that led me into the COT report. So yeah, I always knew that all these items were important, but just never knew how to put it together. So, but this makes it a lot simpler. Euro Swiss. So I drew up this overhead supply zone, and it looks like we've broken through it and closed through it. So this is a good thing. This is what I've been waiting for on Euro Swiss. Now you can see down here, I actually drew up a demand zone on a smaller time frame. I think it would have been a 15-minute maybe. Let's go double check over here. Or hell, it might have even. Okay, it was actually a smaller time. So it was a smaller time frame. It was probably 5-minute or 3-minute. But the reason I did not choose to trade this zone was because if you look all the way at the bottom, the volume spread analysis, that the trading activity was very low because that was the end of the intraday shift on intraday trading session on Tuesday the 6th, so last Tuesday. So I just was not excited about this. So I mean, it looked nice as far as the drop and the jump up, but when it jumped up, here's why I did not like this zone. Because when it got up to here, it did not continue and break the structure and close in a fairly quick fashion, right? It didn't do anything like this, which is what I would have wanted to see. Instead, you can see it came up, it didn't break the structure, and it just went sideways for a while. That was a little bit of a turnoff for me. When I trade demand zones and supply zones, I like to see price, whatever the size of the range of the demand zone or supply zone is, I like to multiply that by 3 and then put that on top of the proximal line of the zone. So 1 unit here, but then calculate 3 units up, okay? If I see zones create price action that does that, it breaks structures. I think I even talked about this on the stream yesterday. Then I'm okay when it returns to price for a buy, okay? But you can see it just didn't do that. But guess what? It doesn't always care what I like or dislike, because what ended up happening, that zone ended up working anyway. We wicked in beautifully and tagged it and then just went up, okay? So that would have been a winning trade. But the important thing is I did not break my set of rules just to fit, just to hop into a trade. It's got to come to me. The markets have to come to us. Got to come to us. So yes, it worked out, but c'est la vie, guys. It didn't fit my criteria, my volume, my initial break of structure. Most importantly, or as important, would be that 3-to-1 move up before the return to the zone. So, but fast forward to where we're at with Euro Swiss, got another demand zone down here. Let me just go back to a 4-hour real quick. So this is my starting point. Okay, decline in price on this leg here, this combination of candles. Then you had a little bit of base before a very strong move away. So this would be the, this would be the momentum up move. Okay, so and most importantly, with this price action right through here, it broke a structure. Not only did it break a structure, but it also broke a supply zone. Not only did it break a supply zone, but it actually closed up here. That's strength on this impulse move. Okay, this whole move is all I care about in Euro Swiss right now. This whole move. I care about that because it broke this structure. That's one of my requirements for a supply or a demand zone. Oh, come on. Is it has to break a structure like that. Okay. Just like back here. Okay. Back here, I had a structure for this zone, and it broke it. It just didn't close on even some of these higher time frames. That's one of my requirements. Okay. That's why I drew this back here. So I'm going to delete that to get out of the way, and we'll get that out of the way. But yeah, that's an impulse leg. Okay. So I have to find a zone in there as close to the origin of that strong move up as possible. That would be down here. Let me get caught up on the chat real quick. No big brother coverage. Wasn't covered in higher time frame zones. Yeah, exactly. So anyway, so that would be the demand zone. Now let's drop down. You guys, anytime I'm looking at a higher time frame zone, whenever I want to refine it, I just divide it by 4. Okay, that's the typical rule I have. So 4 hours divided by 4 would be 1 hour, right? So now let me just get rid of the green drawing here. In looking at that same zone, I didn't really get a good picture on. Now that's a very malleable rule, by the way. Okay, 4 divided by 4, or whatever the number is divided by 4. I'll adjust it. Okay, if it looks better on a 2 hour, if it looks better on a 30-minute, okay, as long as it isn't too crazy, then I'll just look at that time frame. But yeah, 1 hour, I didn't really get anything. I didn't get a good demand zone. Now you could say that this is a demand zone here. Look at this. So this is important. So this did produce my fair value gap, right? For this candle. But the challenge is, the problem is this candle, the basing candle, okay, that last candle finished way up here. It didn't even come down and meet this wick. I like it. I like candles to meet the wicks on the leg out candles just to show, well, basically just to keep my reward risk ratio intact. Because anytime you see a candle body, okay, just know that that's typically where the concentration of trading activity occurred within that candle's range. So if I'm looking at this candle, well, it was way high on this demand zone with almost nothing down here. You had the wick on the leg out candle, but again, I prefer the candle for the basing candle to take up that full range, if that makes sense. And this is a little bit more of an advanced thing, guys. I wouldn't read too deeply into it. This is just 12 years for me of studying supply and demand zones and every possible intricate detail on it, just to see that, hey, we had a zone, we had a basing action, but the bulk of the trading activity happened at the top of it. But I have to utilize more range, basically increase my risk, not increase my risk, but decrease my reward to risk. If that makes sense. So I wouldn't read too deeply into that. Yeah, I mean, it's still by definition a demand zone on the 1 hour. It's just me being extremely picky. So, but being extremely picky is what's kept me safe. Anyway, that's why instead of the 1 hour, I flipped down to the 30-minute, and now the picture is clear. Okay, there would be my 30-minute demand zone on the Euro Swiss for you. So it's basically started out as a 4 hour and then dropped down to a 30-minute instead of a 1 hour. So as long as it's a time frame, below or right above, then I'll be okay with that. Leg out is not explosive enough. It engulfs the base on 1 hour. Let me go back to the 1 hour. Yeah, well, yeah, exactly. And that's why I dropped it to a 30. Yeah, because the picture just looks a lot better. Because if we look over here at the 30-minute, well, now your fair value gap looks a hell of a lot better, right? That's a much better looking gap as opposed to the 1 hour, which I had to put at the top of this candle because this is basic. This candle and this candle equal the 1 hour candle, at least on TradingView. Now, it may look a little different on certain trading, I'm sure you guys have seen some trading platforms are completely different, right? So yeah, 30 minutes, when you look at this thing on a 30-minute, I mean, that's as sexy of a candle as it gets right there, right? Explosive move out, left a gap, broke some of this 30-minute structure over here, and it just kept going, and then broke some of this structure up here, broke this structure up here, and ultimately, I do believe, yeah, it ultimately broke this structure up here. So I like it. I also like that the volume spread analysis was fairly decent. I wouldn't say this is like bend over backwards awesome or anything, but at least the candle was bigger than the candles most recent to it. That's really the important thing. Are we getting growing buying or selling interest in that zone? If we are, then who's getting in the market? Is it you or me? That's typically where the institutions are stepping in because they have they are the only ones that have the power to move price like this. Remember, we're talking currencies. We're talking a 9 trillion or whatever the number's up to these days, 9 trillion, 8 trillion, whatever, $1 million daily moves. Much bigger than the stock market, the options market, everything else combined. Okay. Always know that. I don't know where the crypto market is, by the way. Is that getting anywhere close? Probably not. But when we're talking money on that scale and you see big VSA candles like this red one, okay, these yellow ones, there's not a whole lot that a retail trader can do. Okay. This is interbank activity. This is the big banks trading with each other, moving money across country borders. So anytime and this is why I have the volume spread analysis indicator on my chart. That's one of the only indicators I use. Other than that, I just give me a naked chart all day. Is all I need. That's all I want. But VSA, it's telling us where all the trading activity is growing. Okay, we don't have the centralized volume like we do on stocks or anything else. So VSA is a pretty decent gauge. Okay, I wouldn't say it's 100% accurate. It's nowhere. I don't think it's anywhere close to as accurate as volume is on stocks or gold, silver, all that. But it definitely shows where the hot spots are. Okay, the hot spots. Again, we retail traders, that's not something that we can do. And then just down here, for example, slamming price up. So anyway, that's a long-winded way of saying I like that 30-minute candle. I get off on rants and tangents now and then, guys. Sorry. Yeah, might have to reel me back in here and there. So yeah, let me just turn my drawings back on. And yeah, you see I've already got an alert set. Now I have the alert set ahead of the proximal line of the 1 hour demand zone, but that's just nothing more than, give me a heads up so that I can start anticipating that 30-minute touch. And then we're off to the races. Again, it broke this overhead supply. So that makes this look much, much better. And I'm just going to get that out of my way, color it black, just so that I know it's a former zone that got pushed through. That'll broke a supply zone, showing strength at the demand zone. So that's about it for Euro Swiss. Plus, it is the strongest asset we have at the moment on the Edge Finder, which makes it extra awesome. There's 3 Swiss pairs back to back, Euro, Aussie, New Zealand. So let's just take a look at those other 2 assets with the Swiss franc as far as selling that. A couple 7s on Aussie, New Zealand, Swiss. Let's take a look at that. Aussie Swiss is down here. Okay, this is another one I really like. I really like this one because of liquidity that I see right off the bat. You prefer confirmation after it hits this one, as I can understand. You talk about the zones, confirmation, like confirmation entry. Yeah, going back to Euro Swiss first. Yeah, going back to Euro Swiss. So on something like this, I think I would probably be okay with a limit order because it's at the lower end, the lowest end, closest to the origin of this overall strong move up. Again, we're talking about just this impulse leg. This is down at the bottom. So this is the very first demand zone formed with a gap. Okay, remember? Excuse me. So yeah, just again, the gap is a requirement. So there's my gap. And because that happened at the origin of the strong move up, I'd be okay. If I go to bed tonight and price is down in this area somewhere, okay, I'd be okay with setting a limit order for that 30-minute candle and just going to sleep. But let's just say that demand zone were up here somewhere. Okay, let's just pretend like we got a demand zone right here. Okay. If that were the case, I would not be putting a limit order in and going to sleep. I just wouldn't do the order at all. When it comes to situations like this, what I need to see, and I'll just use this demand zone down here as an example. So let's pretend that the demand zone we're actually interested in is up here. Okay. So for me, if I want a confirmation entry, I've got to see price come down and touch the demand. Okay. I need to see it make that initial bounce saying, oh, and there goes my chart. Let me get my chart up, guys. Get my chart, get my chart, get my chart. Window. There we go. Yeah, it does that every now and then. Hey, it's a free service, right? But it seems like about once or twice per stream it'll do that. So yeah, all apologies for that. But anyway, for confirmation entry, I need to see price come into the zone. And this works the exact same if it were a supply zone, but in this case, demand zone. So touch the zone, okay, come back up. So it's that initial reaction from the demand. So this is essentially where the banks are starting to put in that first little bit of order, that first little bit of accumulation. Also, the retail traders that happen to be looking at the zone. Okay, you'll get that. You tend to get that first bounce. And then I need to see it close and then another decline into the zone. From here, we go a little deeper because now we're collecting liquidity from the underside of this. And we get a close here. And now on this return up, I need to see this break this structure, break this most recent lower high. Okay. So we get the close up here. This turns into an impulse leg because it broke that structure. Okay. Now, typically in the wake of this leg forming itself, and it's not always obviously going to look just like this, but the idea is the new higher high. So anyway, we get this newly formed impulse leg, and now we get a drop. And in this impulse leg, you tend to get another little demand zone created somewhere in there. So I would essentially make that my trigger to buy the market. So, okay, just new demand zone form here. The important thing is this price action has to break this structure and close. Now, sometimes this will run off and leave me, and I have rent and I've lost money. Well, I haven't lost money. I just haven't made money, but I didn't lose any money. But this is the reason I like to see this price action. Oh, get off of there. The reason why I like to see this price action is because just as easy as it could begin with. Okay. So this is the first sign of saying, hey, Mark, hey, traders, hey, banks, I'm trying to turn around and go to the upside. Because remember, it has to be a temporary downtrend, a temporary counter trend move, right? We temporarily have to see lower lows and lower highs coming into a zone on a smaller time frame. Now, higher time frame is different, but we're talking a lower time frame. So in order for it to prove itself on a lower time frame, I just have to see the break of structure of this point right here. Okay, just like that. And then this is the trigger when we come back into a newly formed demand zone. That's confirmation entries that I personally like to use. And ever since I've added this in, okay, it's made the trades a lot clearer. And it's kept me out of a lot of losing trades, most importantly. Okay. But yeah, the thing is, every now and then I'll have a trade like last night. There were 2 trades I was watching last night that ran off and left me. So I didn't lose money. Okay. Job number 1 is capital conservation. Job number 1 is capital conservation. The money will follow when you're trading correctly with the fundamentals, the sentiment, and the technicals. But anyway, yeah, every now and then it will run off and leave me. But just for every one time it does that, for every one time a trade runs off and leaves me, it's probably kept me out of 4 or 5 losses, would-be losses. So am I okay losing 1 potential winner as opposed to 4 or 5 small losses? Heck yeah. That's really my mindset on this. But that's my risk tolerance. Okay, that's my tolerance. It may not be for everybody, but for me, it keeps me safe. And it keeps, most importantly, my challenge accounts going up. Okay? That's the important thing. So yeah, confirmation entries. I used to not really care for them, but now that I fully understand the psychology behind it, they make total sense. And I'm just like, how the hell did I not think about this shit 9 years ago? So anyway, so yeah, Euro Swiss. Again, I get off on tangents. Before I get to those other Swiss pairs, I just wanted to take one more look. So yeah, we got 30 minutes left until we have retail sales and PPI numbers come out. So we'll definitely flip on over to maybe a dollar yen pair and just see what we got. I usually like to just put it onto a 1 minute time frame, get my bowl of popcorn, put the mouse on the back side of the computer so I can't reach it, and just see what happens. Okay, it's the popcorn trade of the day. That's what we call it. Okay, so, and then let me see here. What else did I want to see real quick? One thing I wanted to see was, yeah, I wanted to go here. So looking at the currencies as a whole, it looks to me like, yeah, nothing's really changed, guys. So the top three currencies are still the same. It's the Canada dollar, the euro, and the yen. Those are the three major currencies that are exceeding expectations on the bulk of the reporting at this time. The pound is in the dumps. Swissy ain't that far behind at 17%. Okay. US dollar, 45%. So pretty neutral to me. Really anything that's in the 40 to 60% range is really just a little bit more on the neutral side. Okay. Whether it's 41%, whether it's 59, that just basically tells me I don't have anything super strong telling me, hey, you've got to go buy this currency, or hey, you've got to go sell this currency. So I just like to look at extremes. This is a trade plan all by itself. Now we have our top setups, but when you're very simply buying strength and selling weakness, literally you just come into here and just match up strength and weakness. You know, euro pound longs, euro CAD. So global average 46%, just slightly below neutral. So yeah, let's go back over here. So Aussie, let's go now to Aussie Swiss and then New Zealand Swiss. I want to take a look at those two currency pairs. Aussie, New Zealand Swiss. Okay. Aussie Swiss is up here. We're coming into a new demand zone down here. Maybe on a smaller time frame. We got this nice little Chinese walk action. Okay. Is that not a Chinese walk? From a technical perspective, we got a bottom. We got a triple bottom down here. Okay, we got a reversal here. We got a little bit of a reversal here. We got a reversal here. What's underneath reversals? Liquidity. You got your buyers here, your buyers here, your buyers here. I bet you there's going to be some decent liquidity in this area, is there not? Is that going to be sell orders? Okay. Who knows how wide or how deep this goes, but I bet you there's quite a bit of liquidity down there, is there not? Chinese walk. I come up with some crazy names. Where's that demand? Where's that liquidity? Well, it's into a demand zone. Let me go to my two-hour time frame. So this was a zone I was looking at on a 2-hour time frame over here. There is a zone down here on a 2-hour. Let's go back to a 4-hour real quick. Okay, so here's the thing. I don't have a 4-hour demand zone anywhere in this area. Why do I not have a demand zone? Well, because it looks like efficient price action to me. Think about this for a second. So at one point, well, no, that's not a good example because of the wick. At one point, you could say that this might have been a pretty decent demand zone, depending on how you draw it up. Okay, let's just draw it to there. Hey, that was a demand zone at one point because you had a gap close up here on the second candle, but then it retraced, right? Closed the gap, smacked into the zone, and lifted off. So basically, if you look at all these candle wicks and candle bodies throughout this whole price action, you'll find it's touching a wick or a candle body to the left or to the right eventually. So this is how I know not to worry about, going this deep into price action like this, is if I don't see any gaps. There's no gaps there. No gaps anywhere in here. There was a gap. Well, no, there wasn't even a gap. Yeah, no gaps. So my first inefficiency in the market is all the way up here on, well, even right there on this 4-hour. Okay. I could have drawn that to the 4-hour. Now the 4-hour has been touched. But I personally actually liked dropping it down to a 2-hour to see if we can't find a new entry. So double, triple bottom, however you want to look at that. But most importantly, there's stop losses under here. If these traders are buying, then the opposite of a buy order is a sell. So there's a lot of sell liquidity down here. And what do big banks and institutions need to fuel their buy orders? Sell orders. So there's sell orders from these buyers. There's unfilled orders from this demand zone. Okay. That, by the way, broke a structure, broke this swing high, clear back here. So that's a perfect combination, in my opinion, for a potential long. The volume could have been a little better, so I will give it a -1 from that. But everything else is just screaming by me, in this zone. Now, remember, there's going to be your support and resistance traders buying on these white lines. Is there not? Because they see a touch here, touch here, touch here. So this is why I personally do not like support and resistance. The reason I love support and resistance is because it's showing me where there's going to be liquidity. Okay? Think about it. When price comes back down and touches this area, there's going to be more buyers step in who are going to put more stop losses below, which are going to be sell orders that the banks need to fuel their buy orders. Okay. So yeah, really love this area down here. In fact, I don't even have an alert set. Let's get an alert set. Tiger, get you an alert set. Aussie Swiss. I'll just set that out through the end of the intra-week session. I usually just keep my alerts within the current week I'm looking at. And when it comes the end of the week, Saturdays, Sundays, that's when I usually, close it out. Close out my alerts and just come on now. Close out my alerts and set fresh alerts for the next week. That's typically how I do it. Oh gosh dang it. Why is my Oh, I can just do this, I think. Screw it. I threw it out a month, but whatever. All right, I got my alert down here. Okay. On Aussie Swiss. I believe New Zealand Swiss was the other one. Oh, there goes my chart again. Damn it. There goes my chart again. Let me get that up again. Come on, chart. I hate it when it does this crap. So annoying. Okay. New Zealand Swiss. That's going to be my next one. So let's go take a peeky at it. New Zealand Swiss, New Zealand Swiss. Okay. Higher time frame. Pretty choppy throughout this area, is it not? If we're looking at this on a daily time frame, I would call that chop city. Let me turn my drawings off for just a second and turn on my master pattern. So this is just basically a master pattern showing contractions. And then from contraction points, when we're looking at Wyckoff theory, when we're looking at an actionable way to look at Wyckoff theory, this is really where it starts. Oh my gosh, what the hell's going on? This is where it starts. Okay. Consolidation. So then you get that expansion and contraction, price action, expansion and contraction. Basing, expansion, contraction. So anyway, if we look at where we're at right now, I see a box around it. Just very simply means we've got consolidation. I prefer to be trading items that are not inside of boxes like this, meaning they're not inside of a chop zone. So I need price to go out to the upside or to the downside. In this case, I want to see it go up. So really, if I want to really get involved in that trade, then I just need to wait until price gets out of that box to the upside and then retraces to a demand zone. That's my preference. Now, I don't always get what I want. So let's just go down to a smaller time frame. Just take a look. 4 hour, not really a whole lot of anything. Now, this right here, you would think would be a good demand zone on a 4 hour time frame, but it has a candle overlapping it. Okay, there's a candle over here touching the wick, overlapping. So that's efficient price structure on a 4 hour time frame. So let's just step down. And not only that, we didn't even get on this higher time frame Okay, we did not get a break of structure, did we? So there's no way I could even look at a 4-hour demand zone, even if the wicks looked okay, even if the wicks didn't touch, even if there was a fair value gap, acceleration gap, whatever you want to call it, right? So just step down the time frames, see what the picture looks like on a littler time frame. Okay. 1 hour, still nothing. I guess we did well, here's the thing, guys. So we did technically break this structure right here, did we not? To the right. We didn't close above it. Looking at this now on a 1 hour. We did not close with gusto ahead of this structure. So for me, that just is lower quality of a impulse move, which is basically what this whole price action is, this whole leg. But it didn't close. It just wicked in and got rejected, really on 3 candles, on 3 hourly candles. Okay, big indecision candle right there. And then we had a big drop. So that to me says this whole area is probably not my favorite on a 1 hour time frame. So let's just step it down. Got anything on a 30-minute? Okay, look at here. So 30-minute picture looks a little different. We did get a close up here on a 30-minute. So we could look at this as a 30-minute demand zone because it does have a gap. But did I have any volume? Nope. Okay, filter. It's just filtering me out. Filtering me out. Yeah, you look at that and you got a nice gap. You could look at this as a structure point on the 30-minute time frame, and it did go through it. Obviously, it went through the main one. Okay, but did that look like an institutional move? Not to me. Not to me at all. Because again, the VSA candle was just your average, boring green candle. Green means average. Green means average activity. Average. Some people call it tick chart, or not tick chart, tick volatility or tick volume, I guess. But what I'm getting at is we didn't have any yellow or red candles like we had over here. If this potential demand zone, if these candles were like these over here, oh yeah, all day long, I'd be getting into this trade. But there just wasn't a lot of trading activity, which tells me probably just retail traders, not institutional traders. So that's why that disqualifies that for me. No, not interested. Okay, because obviously, yeah, you look at it. That's clearly, it is defined still as a demand zone. It is a demand zone, but it's just not a strong one. There's supply and demand zones, and then there's institutional supply and demand zones. So regular retail supply and demand, institutional supply and demand. I only care about the institutional supply and demand, the big banks, the ones that are making all the money and taking it from us, right? Remember, they leave their tracks. So this to me is not their track. Over here was their track. Okay. This was yesterday's red folder events that came out. Okay. That's what that is. So that's institutional volume. But that is not. So anyway, I digress. As far as the next opportunity for New Zealand Swiss, it's going to be down here, guys. It's going to be this price action down here. This whole area here, yes, that is a swing low. Yes, it did break a structure on a 30-minute, but I just didn't see a lot of institutional activity take place. And it makes sense why we didn't have institutional activity, because this was the Asia trading session. Okay, this for me here in Kansas City was 7:30 p.m. Okay, our institutions here in the States are out gambling and getting drunk at this time, probably doing things that probably illegal, right? Our Wall Street traders. You think they're doing any trading at 8:30 p.m. their time in New York? No. So this is what little institutional volume would have moved price around in Asia, Japan, Shanghai, all those places. Okay, so it just wasn't that much volume. So that's why I'm not interested. I prefer zones created in the U.S. London overlap. Have you tried volume candles? Yeah, so volume candles doesn't really work, man. It doesn't work in currencies because there's no centralized volume anywhere. There's no centralized, any of that. Not like stocks and gold, silver, and all that. I have it down here. I do have volume down here, but I don't have it. I don't have this indicator down here for the currencies. I only have it down here for when I trade the indices, oil, gold, silver, all that. Okay. So I basically just ignore the volume table whenever I'm looking at currencies because all I care about is up here. But the same thing rings true even for the VSA, for the volume spread analysis. Same thing rings true for all the other assets. It still is going to show where high concentration of institutional activity is taking place. So I look at this for everything, but I only look at, but down here, I just simply ignore the currencies for the volume. So no, good question on that. Oh, wait a minute. Are you talking about volume profile candles, by the way? Is that what you're referring to, Shinner? Like where it has the candle and then all the little numbers inside of the candle itself? I think that's what you meant. I had to think about that for a second. Because if that's the case, that is something that I'm wanting to get into. I have a buddy, a trading colleague of mine that so I have a trading colleague of mine, and his name is Sam. Okay, Sammy Saleh Futures. This guy uses volume profile, as you can see clearly up here in the picture. Me personally, I've never traded futures, not yet, but it's definitely on my to-do list. Definitely on my to-do list, possibly for this year. But for 30-minute time frame, you have to start using volume market profile. Yeah, as far as currencies, again, I haven't messed around with it. I haven't really messed around with it, just mainly since there's not centralized volume. But anyway, yeah, this guy, he does a really cool job of trading volume profile and everything, but he does it in the futures market. So yeah, if you ever want to see how this guy does it, just go to @Sammy Saleh Futures, and he can definitely show you some things over there. So anyway, but yeah, that is definitely on my to-do list for sure, Shanner. Not preferring to use it, yeah. Yeah. Hey, it's okay to keep secrets. Nothing wrong with that. New Zealand, Swiss, yeah. I'm really, there's not really a whole lot else to say on here. Lower time frame demand all the way down here, so nothing really to play at the moment. So really, it's going to just stay all about that, these other couple Euro and Aussie plays. Silver, gold, let's go take a look at that because they're both on the list. Now, silver, this damn asset. I was watching this thing yesterday, and I had my finger over the buy button, and I was getting ready to pull the trigger when it hit this demand zone down here, this green demand zone. I mean, I drew out everything. So just know this started out as a 4-hour. Okay, so it started out this 4-hour candle, had a gap, okay, leg gap, candle gap, the whole 9 yards. Volume could have been a little better, and I think that's partly why I didn't place this trade, because I did not like the leg out volume. I didn't like how it was the same relative to the candles prior to it. So that was one of my immediate turnoffs. But go down to like a 1 hour, taking a look, and this was what I was looking at on a 1 hour. Okay, when I go to the 1 hour, then I isolated this candle here, because if you look at the volume on this candle, on the leg out candle, that's where it really took off. So when I saw this volume spread activity move like crazy for a couple candles, when I saw that, then that told me this was the candle to watch. Now, I was a little bit thrown off by this because let's see, did that have a gap? Let me zoom in. No, that didn't. Okay, yeah. So anyway, the one thing I was kind of turned off on was the fact that this candle was clear at the top of the zone. So this is similar to that very first asset we looked at earlier, Shannon, where we had the candle at the top, but then we had no candle underneath. This is just looking at it on a different time frame. But yeah, I have to keep in mind the risk for the whole 4-hour time frame. Excuse me. But it just sucked that 1 hour candle was clear up here. So meaning I had all this empty space down here. And this is just me, like, just getting way too anal at things like this. Okay. I didn't want to take on this extra risk when all I really cared about was that 1 hour candle inside. So I thought about getting into this trade and putting my stop loss just below the 1 hour zone itself, ignoring the 4 hour side of things. So let's just say that were my stop loss. Okay, normally to stay conservative, I'd be wanting to put my stop loss below the whole 4 hour zone. But when I was looking at the 1 hour, I was thinking about just bringing my risk up here. Okay. So anyway, I was kind of fighting that battle in my head, and then price ran off and left. But when it came back and touched, I was watching a couple things at once after it came down and touched. And basically, a long story short, I just missed the trade. I mean, if I go down here to a 5-minute time frame, okay, when by the time price hit, it had broken the structure. So this is what I was looking for. And I was actually looking at it on, I think, on a 1 minute. I mean, I dropped all the way down to a 1 minute time frame on this thing. And on a 1 minute time frame, I saw that we broke this structure. Okay. So at this point, I was just simply waiting on a retracement to buy. Swing is less stress, and volume profile is not much usable on swing. Yeah, exactly. That's the thing. I'm a swing trader. I'm in trades typically 1 to 4 days. So that's the other reason I just haven't been in a hurry to get, volume profile and some of those other tools. But again, I was with Ola Prime, teaching and coaching Forex on their live stream for 8 months. And some of the coaches on there were futures coaches. And so they'd be going through their futures trades. And then, again, Coach Sam, a couple others, they were going through volume profile. So I fell in love with the idea of it just watching them. Now, again, they trade the futures, and that's what they focused on. But that's part of the reason it got me excited about futures, was just watching them. And then seeing how volume profile worked. I actually got onto YouTube one day and was watching some videos on how volume profile works. And so it makes total sense. But yeah, that's another project for the future for me, and it's on my back burner for sure. But I'm having so much fun trading currencies and the indices, gold, silver. I mean, if it ain't broke, don't fix it. So I haven't really had a big reason to move over to futures. Now they make a lot of money pretty damn quick on those smaller time frames, but they get stressed. I've seen them cussing at the computer. Oh, you damn thing! You are the worst. That's what one of the coaches says, very, very affectionately. So it just looks a little bit more higher stress. I could deal with it because I traded penny stocks for a while too. You want to talk about stress? That's pretty stressful. It could get pretty crazy. So I mean, I'm fine with it, but I just like being able to sleep at night, and I don't want to get gray hair anytime soon. Okay. Daddy, when he passed away, he was 67. This was back in 2008. And he went through cancer. He went through the chemotherapy, the radiation, and all that. 67 years old, and did not lose his hair, and his hair did not turn gray. It stayed jet black despite all those rounds of chemo and radiation. It defied everything we thought was right in the world. So yeah, I say that to say that I think I have a fighting chance. Hopefully I do. So that's why I like to stick to swing trading. Keep my hair around. So that's I just thought that was funny to share. But anyway, silver, what's the next play since I missed out on this demand zone? Well, I do have an alert set down here. So this is another area kind of like what we were looking at earlier on one of those other charts. Swing low, swing low, swing low. So that's a trip. You could call it a triple bottom, a double bottom. Regardless, there's going to be liquidity down here. Okay, right inside of this demand zone on a smaller time frame. Time frame did I look at that on? I wasn't the most excited about this demand zone because the gap I don't think was that big when I drew this up. Let me look. That's okay, actually. Never mind. I guess that looks okay on a. Well, I guess I did draw that up on a higher time frame than a 10-minute. But nevertheless, yeah, it's still a ways away from anything I'm excited about on silver. Let's go back to a 4-hour. Okay, I don't really have any. Yeah, we could look at that actually. No, I don't want to use that as a 4-hour because look at the volume on the next candle, on the leg out candle. That's hideous. Disgusting. Go down to a 1-hour. Yeah, see, this is obviously the beginning of the Asia session from yesterday. All these candles here. So no volume. Not excited about it at all. Yeah, I mean, the one true play we had was the one I missed because I didn't get my pullback. So I'll just go pout in the corner and go find something else. We'll step away from silver. Let's go to gold. Way too stressful. Don't need that stress. Yep, you and me both. Trading can be stress-free when you're doing it. When you figure out the basics, you dig into the nuances, and you don't have to sit on here with your finger on the buy-sell button the whole day. I love it. I love being able to set my alerts first thing in the morning before I get on the stream and then just wait for the alerts. I'm free to do whatever the hell I want the rest of the day. Maybe I'll study, maybe I'll read a book, or just go watch TV or something. But then the alarm goes off and just come sprinting in here and see what it is. So it's pretty nice. Gold. So gold, okay, so gold still has a pretty good picture. I mean, it looks just like silver in the as far as having a liquidity pocket. Let's go find out that 30-minute. Okay, 30-minute demand right here. Now look at this. So this kind of goes against what I said earlier. This is a 30-minute demand zone that is in the beginning of the Asia session. But remember, the Asian session, for whatever reason, man, they like gold, silver, and Bitcoin. So this is kind of the falso amigo, as my Spanish teacher in Mexico taught me, Mexico City. Falso amigo, meaning it kind of goes against the norm, goes against the formula. Gold, silver, especially gold and Bitcoin. Gold, silver, Bitcoin, yeah, they just tend to have quite a bit of reactions, quite a bit of trading people. Asia loves it for some reason, especially the Bitcoin, obviously. But yeah, that's a demand zone down here. Let's just go take a look at it. A 30-minute demand zone, a couple expanded range candles coming out. Again, you see the volume really picking up. But the main attractive factor here is the fact that we do have all this liquidity right here. Okay. Liquidity from these buyers here, these buyers. Little by little, they're throwing stop losses underneath. So who knows how low it goes, but I do know there's a 30-minute zone there. Now, look, I would take a small stab at this. And I drew this up yesterday, I believe. I would take a small stab at this with a light risk, meaning I'm not going to risk a full what I would normally risk. Just kind of dip my toes in the water, so to speak. But if this zone fails, I've got a perfect confluence down below. This is my all-time favorite daily 4-hour confluence. Okay. So daily, let's start off with daily. Let's turn the drawings off. Okay, we got a daily candle here. Got our leg out, which broke structure. In fact, that broke a pretty strong supply zone, did it not? Was that not a supply zone back in time with a really big drop? So we broke through that. So if we had price that was strong enough to break through a strong supply, then that makes the demand look pretty damn strong to me. So we had the push up, and then we had 3 days of basing action. 4 days if you count that candle. But then from there, we had the gap up, which went above price, right? So love that for a daily candle. That's why I got the yellow box around it. Drop it down to a 4-hour, and I've got a 4-hour demand zone, and that zone has a gap as well. Okay, there's my gap right there. Acceleration gap, runaway gap, pro gap, fair value gap, whatever gap you want to call it. News in 2 minutes. Oh, shoot, guys. The news. Okay, good news for the dollar. So we should see some dollar uppityness. Let's go take a look. There goes the dollar yen. Hey, this just came out a minute ago. Let's go take a look. Let's go real quick to the Dixie. Hey, Dixie up. So Dixie is in a higher time frame supply zone. This is what I pointed out yesterday on the chat or on the stream. So we're in a supply zone trying to decide if we want to chew through the rest of this and break through the upside, or if this wants to give us a temporary retracement before catching another potential bid on dollar-based pairs. But either way, it's just chilling in there, guys. So could that be muting some of these moves? Possible. Dollar yen moves the most out of all the dollar pairs, but as you can see, it's pretty muted. That's a pretty muted move despite this data. So let's dig a little deeper into the data real quick. So core retail sales, well, core PPI, let's start with that. So yeah, they had an actual number of straight up 0 against a 0.2% forecast. So that is, yeah, so that's a little bit light for the dollar, meaning slightly bearish for the dollar. Okay. But then you had it balanced out on the other side by the rest of it. So core retail sales 0.5% against a forecast of 0.4%. So that's a slight increase. PPI month over month. So getting away from the core numbers now, the month over month number nailed expectations right on the dot at a 0.2%. And then the retail sales 0.6% actual against a forecast of 0.5%. So all in all, you had 2 warm numbers and 1 cool number, and then 1 neutral. Now, it's a yellow folder event, but the U.S. current account number came out as well, which was also bullish. But yeah, if anything, I would expect to see just a little bit of potential dollar up. But as you can see, it's pretty muted right now. I mean, dollar yen moves 120 pips a day on average. That's the average true range for it. So it's just taking a couple candles here, but perhaps it's wanting to start breaking out. Let's see. Are we in a supply zone? No, we're not. In fact, dollar yen actually bounced into a little bit of a demand zone down here, did it not? And we're looking at this. Let's move 4 hour, 2 hour. Okay, here's a 2 hour demand zone. So dollar yen, just as example. Now, dollar yen is neutral, so I'm not really interested in trading it. But nevertheless, if you're looking at it on a technical aspect, it did drop into a 2 hour demand zone. Did we have some confluence over here on a 1 hour? Well, you could look at that candle. You could look at that candle. In either case, it did hit the confluences. So anyway, yeah, I would expect dollar yen to keep on going up a little bit. 4 hour time frame, this thing's up and up. Now, again, it's not anything that's on my watch list just because the fundamentals and the sentiment aren't giving me anything. But let's go back to the top setups real quick. All right, give me 1 second. Okay, perfect. Gold. Now let's take a look at gold. So if that's good for the dollar, then potentially was gold going to be going down? Let's go take a look. Okay. So here's gold. So yeah, it's really a muted move. That's just the reality of it. We haven't really moved yet. And we had an initial spike down. Okay. What's typically good for the dollar is typically has the opposite effect for gold, silver. Got that initial drop down, but slammed back up. So it's pretty muted at the moment. I mean, if you're trading a challenge account on a prop firm, okay, we've officially made it through the 5-minute window after the news release. If it's a prop firm that has that 5-minute before, 5-minute after rule where you cannot trade or breach your account. So we have hit the 5-minute mark as far as that goes. Some accounts, some firms do 10 minutes, I do believe. So still got a few minutes to go on that. But yeah, so far it's pretty muted. I would like to see a decline in gold. Okay, I'd like to see that incline in the dollar, the decline in gold. If we get that, then we could maybe get some price action down to some of down to this demand zone. I mean, this is ultimately what I'm waiting for on gold. I gotta have, but yeah, I have to. It's all this up here is just too expensive for my taste to be buying gold, and it's high on the curve. Okay, if I'm looking at curve analysis, meaning swing lows and swing highs, this is high up on the curve, is it not? This is your origin of your strong move up. Okay, we're looking at it daily. So anytime I am trying to figure out if I'm buying in premium or buying a discount, I very simply just like to, let's just go to another asset real quick. Yeah, we'll just take a look at oil. So this is oil, just as an example on this. I swear I got way too many colors everywhere. Okay. So swing low, swing high on oil. I like to take my trend-based fib extension tool and go from the swing low to the swing high, then back to the low just to complete it. And this basically breaks this thing up into three segments. Okay. You got the discount zone down here. This is where anytime you buy something, you're buying in a pretty cheap area as far as the higher time frames go. If you are up in this area and you're buying at a premium. You're buying expensive. You're paying retail value for whatever it is. Okay. Down here, this is your middle section. This is where traders get chopped to pieces. This is where don't diddle in the middle comes from. Okay. When you're buying in the middle of relative discount and relative premium, don't diddle in the middle. Okay. This is one of the biggest things I learned when I went to the academy. Stay the hell out of this zone because this is where people get chopped to pieces. Now, I break that rule often, but I only break it because I've finally really figured out how the zones work. I still get a loss every now and then. Okay. But especially for newbies or beginners, this is one of the easiest ways to avoid a lot of losses, just simply staying the hell out of this area. Because it can get pretty volatile. So the basic idea is just wait till you get price at the lower third for buys or in the upper third for short sells, right? So that's curve analysis. And another thing I like to do periodically is just show that that's really nothing more than what the Hungarian flag is, okay? There's the Hungarian flag. So the middle is the white. The red is shorts, okay? Meaning that's where we get in for down moves. And then the green, okay, you buy in green. Green is money. Red is sell. So the Hungarian flag fits this perfectly. Okay, so we're looking at swing low to the bottom of the flag, swing high to the top of the flag. That's it. That's a perfect representation of what I want to do on curve analysis. Okay. Hungarian flag. So thanks to the country of Hungary for letting me use its flag for that example. All right. What else we got? Anybody? You guys got anything else? Any other assets we can look at that you'd like looked at? We do have about 20 minutes. Okay. I got 20 minutes left before the end of my stream. Yeah, just pop that in the chat if you will, if you have anything. Other than that, we can just kind of go through some more of these top setups over here. Nikkei, the Japanese Nikkei popped on as of late last night. So I'm going to take a quick peek at that. Okay. So on a daily chart, we do have a daily demand zone here. If I go down to a 4-hour, we have a 4-hour demand zone inside of the daily. I love it. There's my confluence. You guys see all these white lines in this area. That's smaller time frame confluences. This is a beautiful setup. Now, the downfall is the fact that the volume did not really pick up anywhere in this zone as far as the 4-hour zone. Okay, the 4-hour zone. So let's just go take a look. Did we get any help from a 1-hour? Not really. Okay, if we're looking at the 1-hour time frame, do we have any volume that looks sexy at all? No, not really. Guys, I'm going to proceed with caution with this daily 4-hour confluence. because really the volume didn't start picking up until obviously the big leg out candle. So I might even look at this on a smaller time frame. If I look at this on 1 hour, yeah, I don't know. I mean, this would basically be your 1 hour demand zone right here. But the problem is the origin of this strong move up is down here, and there's gaps along the way. So banks like looking for inefficiencies in the market, right? If they're looking for inefficiencies, the closest one to the origin of the strong move is down here, which is in that demand zone. Problem is there's no volume. So it's really kind of are they going to be that excited about it? If they're not excited about it, then I'm probably not going to be excited about it. So I may get into a trade down here. I just ain't putting in a whole lot of leverage at all. We're keeping the risk pretty low on it, despite the fact that it's my favorite confluence, which is the daily 4 hour. So there's going to be other assets I think that are going to be, more appealing. Now I'm still going to bring that 1 hour demand zone forward just so I can keep an eye on it. I did have an alert set all the way up here at that zone there. Price dropped through. In fact, I think, let me go to my alerts. Yeah, see, I had that as an alert, the proximal line of this demand zone before I went to bed last night, without any expectations on buying this. I just wanted to see what had happened. And sure enough, it just wicked right through it this morning. Okay. 6 a.m. my time. It just wicked all the way through. Couldn't care less. Could not have cared less about the zone. So say la vie. And this makes sense because number one, I didn't really have a great confluence. I didn't have any smaller time frame gaps. But most importantly, why I didn't like it is because it was high up on the curve. Okay. Swing low, swing high. Where's the Hungarian flag? Where's price at? Right. Just I'm telling you, this works quite well. Swing low, bottom of the flag, swing high, top of the flag. If I buy up here, am I not buying in a premium? Okay. That's the same as going and buying a brand new car, full price, full retail price, or buying a car that's a year or two old down here in a discount, or 5 years old, right? So I do not want to pay full price on a car. I want to wait till it goes on discount. Same thing that you do in everyday life. The way you buy and sell anything in life is the exact same way, the exact same mindset that you want to have in trading. But far too often, people have the opposite. People are buying at premium. People are shorting at discount. It's the complete opposite of the way we need to do it. Okay? So, and it's scary when you're all the way up here and you've got this big trend going and you think you want to short. It could be equally as scary when you got a big ugly decline and then you're trying to buy it. Okay. But there's confirmation entries, there's waiting for reversals to happen before you latch on. There's all kinds of things. But anyway, enough of that. I don't have anything until we get down here. So again, that alert just popped on. I am going to go ahead and set an alert for this zone here just to see what happens if and when we get a drop. And if it gets to the end of the week and we haven't gotten down there and we still got a bullish signal, then I'll just put the alert on for the next week. Why in the hell is this not giving me? I can't even put alerts on because this damn box. That's annoying. Yeah, the box is in my way when I'm trying to do an alert. Hide. Oh, let's just hit. Okay. There we go. Learn something every day. Okay, so there's my alert, guys. 1 hour time frame. 1 hour time frame. So, and then just looking through the rest of my alerts. So NASDAQ. So look, man, NASDAQ is in a zone that I'd like to buy. The problem is it's not necessarily on my bullish list. I mean, I think it's a +4 neutral. Go look at NASDAQ. Yeah, right there. Oh, no, it's +3. So it's actually lost another point. So it looks great from a technical point of view, but that's only part of the picture. What's the put to call ratio telling me? Let's go look at that. Okay, put to call ratio. Sentiment. Crowd sentiment, put to call ratio on the NASDAQ. I do believe it is getting close to buy territory. Okay, so there's S&P. It's out in the middle. Okay, so not really a strong bullish or bearish signal. NASDAQ, same thing. It's back to the middle. This was up in the high put volume as of yesterday. But as you can see, it's come back and regressed to the middle. So not getting a strong signal there either way. Just for kicks, what's the Dow giving us? Okay, it's a little lower end towards the call side, but again, it's a little on the neutral side. We only care about the extremes. It's brilliant that Nick put this in the edge finder, because it's just brilliant being able to see the extremes of where people are at. The same as the sentiment, same as the retail sentiment over here, guys. I mean, this was the whole reason I found Nick. This was the whole reason I got the edge finder, was because of retail sentiment. Okay, using this as a contrarian signal, and now to have all these other contrarian signals. Okay, put to call ratio, the AAII sentiment for stocks and the NASDAQ, the indices I like to trade. Oh, okay, right there. There's another example of why not to necessarily get excited about buying NASDAQ, Dow, S&P right now, because the bulk of traders seem to think that's where trading's going. The markets are going over the next 6 months. Okay, so that's a fairly bullish sentiment on their behalf. So if they're going long, do we want to chase? Do we want to join the crowd? Or do we want to observe the masses and do the opposite, right? Shinner, have a good one. Thanks for stopping by. I'm here every morning, Monday through Friday, so we'd love to have you. But I do appreciate you stopping in. And, look forward to seeing you again. Okay, take care. Have a great day. And then... and then the Bitcoin to gold ratio is a great thing to have as well. Just seeing, hey, are we in a risk on, risk off atmosphere? When this thing's trended down, typically risk off, especially when it's below that red line, that moving average. Okay. So it's been a little bit on the risk off side. It's for a while, but honestly, the market hasn't even cared, because the markets have been going up despite this going down. Remember, Bitcoin is a risk on asset. So this has kind of been going against the grain, the reality, the narrative of the indices. Going down when you would think it would be going up. So anyway, good to have that. What else are we looking at top setups wise? Getting down to the nitty gritty. We got Euro New Zealand, then we got Pound Aussie shorts, and then I think that'll be about it. So let's look at Euro New Zealand. Euro New Zealand, Euro New Zealand, Euro New Zealand, Euro New Zealand. 4-hour time frame. What do we got? Triple bottom. We got some liquidity here. Is this not a big old patch of liquidity from all these buyers here, these buyers here, these buyers here, putting in their stop losses, which are shorts, sell orders. Okay, liquidity. Now, obviously, it's going to look a little different than that. Okay. Well, I don't know. You guys get the picture. Liquidity. Liquidity there. I wished I had a way to copy and paste. I don't think I do I? Oh, I can do that. I didn't even know I could do that. Hey, you learn something every day. Hey, all right. I didn't know that you could copy things like that and paste it like as if you're copying and pasting text. But anyway, there you go. Liquidity. Those are sell orders underneath those swing lows because of these buyers pushing price up. Okay, liquidity. Now that we know there's liquidity there and there's a lot of sell orders, do we have any demand zones in this area? Well, let's look at a 4-hour. On a 4-hour, I can't use this as a demand zone because the candle overlapped. Okay. This right here overlapped. We had an overlap. We had that candle overlap. Did we not? So push out. And besides, it didn't even go 1-to-1 before it retraced. So absolutely not. Let's step down to a 2-hour. Do we have anything on a 2-hour? No. That candle overlapped there as well. Okay, that candle overlapped this candle here. So that's an efficient price structure. Let's go to a 1-hour. We got anything down here? Nope. Same thing. Overlap this wick. These two overlapped if we're looking horizontally. Nothing down here. This is all wicks overlapping in bodies. So there's no demand zone. This is probably about the lowest I'm going to go just because of how high we came, but I will go take a look at a 30-minute. And even if I find something, guys, I don't have any higher time frame confluence. So yeah, this is, okay, this would be, and even that one got touched. Okay. God dang it. So there's your demand zone, which broke structure. Volume was okay, but not great. But then look, did it get touched? It already did. Already got mitigated, already got touched. So we would have to, I would have to, according to my rules, draw that a lighter green color, just telling me there's something fishy to watch out for. Okay, and again, we're looking right here. There's your demand, but it's already been mitigated. I really have no interest in it because it's a way down on a smaller time frame. Excuse me, way, relative to these higher time frames. I just dislike it. I love the liquidity aspect of it, the stop loss is underneath, but it's just not giving me a good picture of potential unfilled orders. So anyway, we're going to skip that. And then the last one I'm going to look at is the one and only bearish asset I have, and that's pound Aussie. It is giving a nice, strong bearish signal. So let's go take a look. Pound Aussie shorts. Pound Aussie shorts. There you go, right here. All right, we are in a supply zone that has been touched, but you can see there's a white line up here, which tells me I've got a smaller time frame confluence. It's not an hour. Is it a 30-minute? Let's go take a look. Okay, 30-minute. So we are looking at this candle right here. Yellow bars, meaning there was a little bit of volume, a little bit of decent volume at the creation of that before the big push away. Now our gap was a little small. Okay, I have to zoom in just to make this picture visible, but there's your gap right here. Okay, that's the gap. It's tiny though, because your leg out candle, I mean, it had some strong rejection. So do I really want to trust this supply zone? Okay, I just want to be aware of that. I want to be careful with this. I like leg out candles to close at the bottom. Okay, close at the bottom and then have a continuation play. We didn't have that. We just didn't have that. Now you look at the leg out as a whole, it looks good, but I'm just talking about the immediate push out. Okay, that 1 hour window basically, or 2 hour window. Okay, you had this hesitation right here, but down here it started looking better. So does the picture look better on this zone down here? Let's take a look. Now, this is the origin of this overall strong move down up here. But down here, yeah, you have a gap here as well. Okay, that gap looks just a tiny bit better. So basically, we'd be looking at this as the supply zone. So basically, I would probably just be more interested in just looking at this thing as a whole. Okay. Actually, let's take one more look at a 15-minute. Go down to 15. Do I have any decent looking gaps down here? Is this helping me out? I don't think I'm getting a whole lot of confluence, I think is the common theme here. Okay, the bulk of the volume took place up in this area. I guess you're let's see, what's the gap? Yeah, we just didn't really have any gaps, guys. That's kind of a disappointing picture. We have gaps, they're weak. Those are weak fair value gaps. So if they're weak fair value gaps, that just basically is telling me, do I have, I don't know that I have a lot of really strong interest from the smaller time frames. Now, the smaller time frames aren't the ones moving the market, meaning the smaller time frame retail traders, right? But I still like to have those smaller time frame traders that know a thing or two about supply and demand zones. I still like to have them on the side. Okay, I really do, because they are just like me trying to follow the big banks. So am I really excited about this area? No, I'm not. And you guys see I drew up this box Okay, this box right here is a big old contraction box. It's diddling in the middle. Okay, swing low, swing high. So I'm going to basically wait for a retracement to the supply zone up here. You see, I've got my alert set, and but other than that, I'm not interested. I tried hard to cross my eyes sideways just to look in these smaller time frames. But if I have to squint hard to find something, then I shouldn't even be worried about it. I should be ignoring the hell out of it and just going on to something different, bigger, and better. So that's it. That is all of the alerts that I'm keeping an eye on at the moment. I'm going to go back through these here in a few minutes after I hang up with you guys and see if we can't find something on some smaller time frames. But I think that's about it. Looks like everybody's off. So I'm just going to go ahead and end this now. But guys, as far as tomorrow goes, tomorrow being Thursday, okay, we got the GDP for the GBP. Okay, that's coming out overnight for me, so that'd be 1 a.m. my time. But other than that, 7:30, we got our weekly unemployment claims coming up tomorrow. Okay, we'll be on stream for that as well. So unemployment claims, 7:30. Looks like they are projecting about a 7,000 job increase in claims. So not great. Okay, not great at all, especially since the jobs numbers haven't been good to start with. Just for kicks, we got 2 minutes. Just for kicks, let me just go look at unemployment. Do I have unemployment claims over here? Let's go look at the economic data. Let's go look at labor market unemployment claims. Yeah, here we go. Okay, unemployment claims. So again, projected 215,000. Now this number, unemployment claims. Yeah, so this number, I mean, it was as high. The highest it was back on September 11th. And then we slowly started going down each time. But then all of a sudden in December, you had another increase, another spike. Okay. Well, as far as this week, I should say. Okay. That first week of December was our lowest unemployment claims release, during the second half basically of the year. But then you had another spike up. So we're kind of going through another gradual decline, but then you had a higher one last week. So it's staying steady-ish. I mean, if you could imagine the average of the red lines there. Okay, that's their forecast. Yeah. Oh, yeah. Overall, we just need some more. We just need some better jobs numbers. I guess there's not a whole lot to say on that, guys. Unemployment claims. We'll see what happens when that comes out, and then we'll take a look at our trades accordingly. But yeah, I didn't really have anything right now. I think, and I did close out, just so you guys know, I did close out my Aussie dollar long position. This was what I was talking about on stream with Nick yesterday. We did finally have that candle come back and take me out. So I made about $120 between two accounts. Not that much, right? Just a small win. I was waiting for price to break through this supply zone, and we just never really got the break of this right here. This was where I knew we were probably going to have some issues, and it did barely break through, but then it wicked hard down. Okay. Wicked hard down. So whenever we got into this candle, it took me out. I made $60 on both accounts, guys. It was just a small amount of money. But hey, the important thing is it paid for my swaps, and it paid for my exactly, a win is a win. Paid for my swaps, Donnie, and it paid for my commission. So at the end of the day, I got a green lamp on over here. Now I just need to make it greener. But that's all I got for you guys for now. I'll be back on tomorrow, 6:30 a.m. Central Standard Time. So I do appreciate each and every one of you that did pop throughout the morning. But yeah, come back and see me tomorrow. We'll get into those economic numbers, see if we can't find some actual trades. And hopefully I'll be in something by the time we get on in the morning. So anyway, peace out. Have a great rest of your hump day. We'll talk to you later.